The phrase on everybody's lips was decoupling, separating the U.S. and Chinese economies. But is that even possible right now? Let's take a look at how that decision is going to impact U.S.-China trade policy with Wendy Cutler. She's the vice president of the Asia Society Policy Institute. Wendy, I'm sure you were riveted to this hearing as I was this week, and you just wonder at this point where we've had so many decades of globalization. Now we're talking about decoupling, which is really deglobalization. Do you think that's even possible?
Well, it's not possible across both economies. But what is possible is what I would call strategic decoupling. In those sectors that are key to national security and economic security, you take measures to reduce your reliance, for us to reduce our reliance on China, for example, and seek other trading partners, as well as boost our manufacturing at home. So that's a trend I think we're going to see, but I don't think we're going to see complete, disintegration between both of our economies. They're way too integrated.
I mean, it reminds me, who was the celebrity who had that idea of conscious uncoupling, right? I mean, are we consciously uncoupling with China here? And how do we even do that? So put yourself in the shoes of a CEO and think about where your supply chain is right now. What are the first 2 or 3 things you do after watching that hearing this week and saying, hey, wait a second, the winds are changing in Washington. Now we need to change our whole approach to supply chain. What do you even do?
Well, the first thing any company needs to do is to map out its supply chains and to know exactly where all the parts and inputs and materials are coming from, and then identify choke points in areas where there are vulnerabilities. And in those cases, think of either moving those parts out of China or creating redundancy, what's called a China plus one strategy.
But the timeline on this could be ridiculous, right? I mean, just so postulate the sort of worst case scenario that everyone's worried about, which is that China decides that they're going to go into Taiwan and you get a shooting war in Taiwan. On that day, at that first hour, that's going to be a nightmare for American companies. And you wonder, a giant company like Apple, for example, which has huge markets potentially in China, huge manufacturing dependence on China. Is a Chinese invasion of Taiwan, in your view, an existential threat to a company as big as Apple?
Well, it's a huge threat, not only to Apple, but, to the U.S. economy, to the global economy, et cetera. I think, again, it's not like these companies overnight are waking up to this. There's been a trend and there's been discussions in Washington about decoupling now back to the Trump administration. So I think many companies, particularly companies like Apple, are already beginning to take steps. And we've seen them move some of their manufacturing already to India in particular. Many companies, frankly, are staying quiet about their efforts to move out of China, not wanting to bring attention to themselves, to these shifts to the Beijing authorities.
Yeah, some of the numbers I think that you provided to our team today on just where we are with Chinese trade is fascinating to me because, even as Washington is talking about, decoupling or consciously uncoupling, whatever we decide we're going to call it, the end of globalization, say, trade to China between China and the United States is increasing, right? So the people who are actually living in the economy doing the business are doing more, not less. Is that right?
Well, 2022 record year in U.S.-China trade with about $700 billion worth of goods moving between the two countries, including agriculture, manufacturing.
That's incredible to me after the pandemic and amid the tension with Taiwan and all the tension in Washington and everything we're seeing. How is that possible that number's still going up?
Well, there are a lot of things we're still trading. Frankly, inflation, this is based on value. So some of these numbers are jacked up because of inflation. And also, I think we're still in kind of this COVID kind of buying spree where there's a lot of demand for the types of products that China produces. But I think that this will be the record year and that the trend is going to be going down 2023 and onward. I think this is a banner year.
So do the people who are actually buying and selling and sending container ships across the Pacific Ocean look at that hearing that we saw in Washington earlier this week and say, hey, wait a second, we've got to change the way we do business? Or are those timelines on totally different tracks? And people doing business right now say, look, I got to get a container in this quarter. Forget Washington. I got to do business.
Well, again, it really depends what sector you're in. And a lot of the, this goods trade we're talking about are in areas that really are not strategic products, whether it be soybeans or toys or bicycles or chemicals, et cetera. So my view is it really depends on the sector. But I think you put your finger on an important point. There is like a timeline issue here. It took us 20 odd years to integrate with the Chinese economy.
Right.
And to benefit from globalization or, to be hurt by globalization. And you can't unwind this overnight. It's going to take time. And that means there will be vulnerabilities. There will be instances where our companies are going to be presented with, measures that they're going to have to, let's say they'll be faced with regulations from both countries that they're going to need to abide to immediately.
And CEOs are in an impossible position as a result in many cases. Wendy Cutler, this is a fascinating conversation. Thank you so much for your expertise tonight. Really appreciate it.